In 1961, the dollar bills were not Federal Reserve notes, they were silver certificates, which you could take and trade in for $1 in silver coins. $1 in silver coins contained about 0.72 troy ounces of pure silver. In 1961, because the price of silver was pegged by the government at just 91.5 cents, it didn't make sense to change in your silver certificates for meltdown silver coins because the melt value was only about 66 cents, which is less than the dollar face value. That was about to change though. In 1961, President Kennedy announced a plan to retire the silver certificates. The reason being that all the silver that had to be held to back those certificates could be freed up and used to mint more silver coins. However, by 1964, it was announced that there was a worldwide shortage of silver and that the government was going to remove all of the silver from the coins except for leaving 40% silver in the half dollar, down from 90%. People were told that the price of silver would still be maintained low by the Treasury because it could continue to sell from its millions of ounces of stockpiled silver, so there was no reason to hoard the old silver coins. Also, everybody was assured that the new Federal Reserve notes that would replace the dollar bills would still be backed by at least 25% gold. And most importantly, the new coins would still work in vending machines. By 1967, the government announced it was not going to try to keep the price of silver down by selling anymore. At that point, the price of silver had already risen past the point where it was profitable to hoard the silver coins, which is $1.29 an ounce. And by 1968, once the word got out that the money was not even going to be backed by gold anymore, the price of silver made it past $2.22 in 1968, which is almost a double from where it had been just a few years earlier. In 1968, the government announced that June 24th would be the last date it would let people redeem their silver certificates for actual silver. After that, the silver certificates would just be worth $1 and you couldn't get silver for them. This was really good timing because now it actually was worthwhile for someone to trade in their certificate for actual silver. By 1969, the government announced that it wasn't even going to put silver in the half dollar anymore, so it went from 40% to zero, leaving no silver in any circulating US coins. And people were going to Canada and smuggling their coins over the border to melt in the United States because Canada continued to mint its dimes and quarters and halves in 80% silver. That continued until the 1970s. By the 1970s, the price of silver had risen past $5.70 an ounce. That meant the silver coins from before 1965 had a melt value over 4 times their face value. And as we all know, by 1980, the price made it for a few minutes to $50 an ounce. And on the way down, in February and March 1980, stores around the country were having crazy sales selling refrigerators and couches for prices that no one could believe as long as you paid in silver coins from before 1965.